Howdy there, folks. Welcome into today's video. Boy, do we have a lot to go through in this one. So many stocks to talk about. One of my stocks crashed here today. My gosh, there's so much going on in the market. It's a busy time. So many opportunities we got to speak about in today's video. Busy video. So I appreciate everybody joining me as always. Sit back, grab a drink for this one because it's going to be a beast of a video. I appreciate y'all joining me as always. Thank you for being subscribed. I want to get straight into this, okay? So first off, where we're going to start today's video is with e.l.f. on a shelf. e.l.f. stock, which has been a tremendous stock for me over the past few years, been even a bigger gainer for me in terms of percent than actually good old Tesla my Tesla. This stock was down almost $11,000 for us here today. It was down well over 8%. And so right off the bat, I'm like, man, that's not usually a stock that falls just that much randomly. So it's got to be some sort of news in regards to this, right? And I look, and I scour the internet for news in regards to e.l.f., and there's absolutely nothing. Last time there was any significant news with e.l.f. was back at the end of August when they bought out another brand, essentially, for about $355 million, and some analysts have some things to say about that. And I'm looking and I'm like, what's this share volume? And basically the share volume was over double what the average amount here today is, okay? And I'm like, what is going on? So usually if I can't find news in regards to it, the next place I'll look is my private group's Discord chat, because sometimes we have, we have 1,000+ members in there and so many folks that are focused on the markets, right? And so I'm like, maybe there's something in there. Couldn't find anything in there. I was so desperate to try to find news in regards to e.l.f. You know what I did? I went to the forum boards. I was like, maybe the forum boards are talking about something. Like, that's my last ditched effort of like, let's just call it, I need to find out what's going on. And I didn't see anything in regards to forums, which, by the way, forums, don't go on forums, okay, unless you want your intelligence to go down a little bit, because I'm just telling you, it's ridiculous. It just, every one of these forums is like the same thing, just people either talking trash or like, I'm loading up on this stock. It cracks me up, man. Always very entertaining. So there was no news in regards to e.l.f., but the stock was down 8 to 9% today. So somebody was putting insane selling pressure on this stock and has been actually putting some selling pressure on that because the stock's fallen quite a bit in the past few trading days. So there's something going on there. Maybe somebody knows something, or maybe somebody's just looking and like, I just want to cash out some shares in regards to this one, right? Now, the divergence between e.l.f. and Estee Lauder has been nothing short of shocking this year. Absolutely shocking, okay? e.l.f. is up over 100% so far year to date, and that's even after this epic fall here recently in regards to stock, right? Meanwhile, Estee Lauder is down nearly 40%, which just goes to show you how much inflation's really hit consumers this year, where Estee Lauder just hasn't shown any, real strength in their business, while e.l.f., which sells almost everything for e.l.f. is $10 or less, and most things are $20 or less, whereas Estee Lauder is really like $50 and up and really $100 and up, right? Clear divergence going on there. I don't think it's going to stay like that forever. I do believe, if you're wondering, like, do I think Estee Lauder stock is coming back? Okay, my belief is, yes, Estee Lauder stock is coming back. I do think that is a long-term buy. It's a great company. I don't personally own any shares right now, but I could own some shares in the future. Let's just call it that, okay? So definitely like Estee Lauder. For the long term, it's just not a stock that is in a good place in the short term, okay? Alrighty, next subject to talk about. Now we're going to spend some time talking about a lot of dividend stocks, because there's something very interesting going on here in regards to dividend stocks, which, was definitely a group that held up relatively well in the stock market. Let's call it a calamity, crash, whatever you want to call it, that happened last year, where the NASDAQ fell peak to trough about 37%, right? Dividend stocks held up pretty well. And these stocks can't find a bottom right now, okay? I want to go through some of these and talk about some of these, okay? Look at Cheesecake Factory, good old cake, right? Big dividend yield in this one, pushing almost 3.7% now at this point in time. Cheesecake Factory's numbers have been beautiful this entire year, okay? Absolutely beautiful. They had great guidance. There's nothing wrong with Cheesecake's business model, but man, the stock just can't find any ground right now. And it just seems like pretty much the whole month of July into August has just been a clear, like, cashing out of Cheesecake, right? And I even said this. I said, this is in the private group's Discord chat. I said, cake under $30. Only times we've seen this stock lower in the past 5 years was really August 2020, May 2022, and during the February through April, obviously 2020 Rona crash, right? Which, that was pretty much the worst case scenario for cake. All of a sudden their restaurants were all closed down. Like, that was insane to think about. Like, you'll take a recession any day over your restaurants are literally closed and you can't make any revenue. Like, that was absolute mind-blowing, just craziness at that moment, right? And here we are with cake sitting at those sorts of prices, right? And so you kind of got to look and you say, is it just one stock? No, it's almost all these dividend stocks are faltering right now. Look at Texas Roadhouse. Texas Roadhouse, one of the greatest stocks in the entire stock market. Literally, okay? This company gets put up on the shelf of e.l.f. on a shelf, up on the shelf of Apple, up on the shelf of Tesla, of like the greatest stocks literally in the entire stock market over the past, decade or so, right? Texas Roadhouse continues to falter, and look at it's at the same exact time frame, basically right starting at toward the beginning of July, mid-July, the stock just started to falter and it just kept going down and down and down, which is exactly lines up with Cheesecake Factory, right? And so I want to take this a step further, and I said, is this just Cheesecake Factory and Texas Roadhouse? Let me see the big dog in the restaurant category and see what's going on with them. And you know what I found? Here's what I found. Look at this. Darden Restaurants, usually considered as big dog of the restaurant space. This stock, same exact phenomenon, where it just goes down and down and down and down. And at the same exact time as Texas Roadhouse and Cheesecake Factory, they're all going down at the same exact time. So the thing you got to ask yourself, why is this happening? What is going on here? What does somebody know? I'll tell you exactly what's going on here. What this is called is rotation. This is something that happens in the stock market. The restaurant stocks had been hot for a while, and now a lot of people are looking to rotate that. And I think a lot of people have rotated into the energy stocks pretty much since around, let's call it the beginning of July, mid-July. And so I think you've seen rotation from a lot of these restaurant stocks, right, to other places. One of those being certainly energy, right? Hasn't really been to like the AI plays and things like that, right? If anything, those have seen some outflows recently and some real weakness in regards to those stocks. So this is something that happens in the stock market. It is something that goes on. It's what we're dealing with right now, right? But at the end of the day, I love at least two of those companies, right? Cheesecake Factory and Texas Roadhouse. For the long term, I'm hoping those stocks continue to show weakness for at least the next few months, as I would love to continue to be a buyer of those stocks. Those are just, throw them in the filing cabinet. They handle everything well. They got through the worst case scenario, which was Rona, and those companies are just very, very strong, and they're going to continue to be strong, okay? Now, you look at a stock like WBA, Walgreens Boots Alliance. I mean, one of the most recession-proof companies you could ever imagine. Their numbers have been pretty good actually recently as well. They did lose their CEO and CFO, so that's one of the major things that's putting a damper on the stock. It just can't find a bottom right now. I mean, it just continues to go lower, right? Stock's down about 40% year to date. Look at the dividend yield. Are you joking me? Is this some kind of flip and flapjack and joke here? 8% plus dividend yield now in WBA? It's insanity. Absolute insanity. Yeah, interesting, okay? This is just, I don't know. I don't think this is people thinking with their brains anymore at this point in time in regards to these dividend stocks. Look at Target. This stock has just continued to see weakness and weakness and weakness. Meanwhile, Target has some pretty positive news recently. By the way, look at Target's dividend yield now. Are you kidding me? Are you kidding me with Target's dividend yield? Come on, man. Come on. Like, are you kidding me for one of the most well-run physical retailers in the world? Like, what? What are we talking about here, right? Now, here's also what's going on. Target is going to hire 100,000 workers. What? Target said on Tuesday it would hire nearly 100,000 employees for the holiday season, like the past 2 years, and start offering discounts for the festive period as of October. The plan comes against the backdrop of predictions that sales growth during the crucial holiday period in the United States could be half of what it was last year due to higher prices denting consumer spending and worries of a recession. MasterCard report on Tuesday showed U.S. retail sales could rise only 3.7%. That's not so bad. I'll take that, okay? For the period beginning November through December 24th, compared to 7.6% growth as seen in 2022, okay? I don't know. Something tells me, and this isn't even the biggest announcement in regards to hiring today. I got a way bigger announcement to tell you about in a little while, which includes 250,000 jobs somebody's adding, okay? We'll talk about that in just a moment. But seeing Target's move here and seeing this other company, it tells me that likely we're going to see a strong holiday shopping season, okay? Like, these companies aren't going to add all these workers unless they're think like business is going to be very strong this holiday season. We do have something very positive going on here in regards to this holiday shopping season that we did not have last year. Do you know what it is? I'll tell you exactly what it is. Consumer confidence is at a much better place going into this holiday shopping season than certainly the lows we saw in 2022, okay? Also, real wages have started to go positive recently over the past, let's say, few months, which is also a difference than we had in 2022, where real wages had just continued to go down and down and down. So that's flipped very recently, okay? So those are some kind of good things. I don't know, like, seeing some of these moves from some of these guys, maybe they know a little something, okay? Maybe they know this holiday season is going to be pretty darn good, okay? Foot Locker, another one of these stocks. Now, Foot Locker did cut its dividend yield because they're kind of in a restructuring of their business right now, so there's no dividend yield. But think about this. If they still had that dividend, the dividend yield would be 9% on Foot Locker now at this point in time. You come on, man, 9% dividend yield if they still kept it. That's insanity, right? But that's just another one of those stocks that just can't find a bottom anywhere right now, right? Pfizer, PFE, look at the stock. It's down over 33% year to date, still hasn't found a bottom. The dividend yield in this one's pushing 5%. All these companies I'm going through, these are some of the greatest dividend stocks of the past, 10, 20, 30 years, okay? Like, these are some of the ones, like you usually think about like Coca-Cola, Pepsi, Procter & Gamble, J&J. And then once you go a tier down, these are all the stocks you start thinking about. And these stocks just can't find a bottom anywhere right now, right? Look at a stock like Nordstrom. Nordstrom, over 5% yield now at this point in time, right? Stock just can't find a bottom anywhere. And guess what? It's seen real weakness since kind of the beginning to mid of July, just as the restaurant stocks have, right? Which also kind of lines up with inflation data, which is kind of seen as a problem for the economy, a problem for the Fed, and potentially raising rates even higher, right? I mean, it's just dividend stock after dividend stock after dividend stock cannot find a bottom right now, right? Wynn Resorts, which just brought back its dividend very recently, and they're going to have a lot of room to up that dividend over the next few years. Holy smokers, that's no joke, okay? This one continues to falter, just like all these other stocks. You know what's interesting about the Wynn? So I went to the Wynn on Friday night, okay? Went to the Wynn on Friday night, went to a couple stores. I want to see what was going on at the Rolex store, even though I don't like Rolex. I just like to kind of, see what's going on there as far as business. Went to Watches of Switzerland. And obviously walked around the gaming floor. Oh my gosh, was it stupid busy. I mean, just out of control busy at the Wynn, okay? And I went to this restaurant, Casa Playa Mexican restaurant. This is like 9:30 at night on Friday night, okay? I was lucky to find 2 seats open at the bar for my wife and me, okay? Lucky. I was like, wow, it's a miracle because it was that dang busy there, okay? And the restaurant's packed. I mean, the gaming floor was packed. The poker floor was basically like an overflow situation where the poker room was full, but then they had all these other extra tables, like just on kind of the gaming floor in this extra area of Encore, essentially, right? It was insane. I mean, in Kendall Jenner, she made her drinks. There's a picture I took here. Okay, that did not happen. Unfortunately, it wasn't the same night, man. Dang. Although, I gotta say, I spent $100+ at the place. I think she should have made our drinks because that place was expensive. But Wynn was popping. I don't know if I've ever seen it that busy in my life. I'm not kidding you. I don't know. I've been to the Wynn so many times on a Friday night, Saturday night. I've seen the Wynn so busy before. I don't know if I've ever seen it that busy. It was insane. I don't know if it had something to do with the MGM properties and everything that had been going on there. And so a bunch of extra people came to the Wynn. I don't know. All I know is it was like a can of sardines in much of that place. And, the Wynn's massive. I mean, one of the biggest resorts you'll ever find in the world. Like, woo, they're putting up some numbers. I can tell you that. They're putting up some numbers over there. Disney, which Disney is not paying a dividend right now. But don't be surprised if Disney they're talking about bringing back that dividend. Let's just call it that. They're talking about bringing back that dividend at some point in time. That stock continues to not find a bottom anywhere in sight. Now, here's the deal with Disney, okay? From what I heard, they're gonna spend like, listen to this, okay? They're gonna spend like $60 billion on parks and their cruise lines over the next decade, okay? That number's insane. I just said $60 billion is what they're talking about. Now, here's the issue. People aren't happy with Disney's balance sheet right now. So where's that money going to come from? It's either going to come from profits at Disney, which their income statement is also messy right now. Their income statement doesn't look great. So they got a messy balance sheet, a messy income statement. Where's this $60 billion coming from to pay for all these park upgrades and cruise upgrades over the next decade? And Disney's not seen in the best position right now, folks. So what a mess. I mean, what an absolute mess. And to say you're going to spend $60 billion, I'm just telling you, like, that's why the stock was down 3+% today. Because shareholders are at 3.6%. Because shareholders are looking like $60 billion. Where's the $60 billion coming from? Okay. The income statement's a mess. The balance sheet's a mess. Whew, Disney is a piece of work when it comes to that stock. Oh my gosh. Okay. You know, the next 12 to 18 months are just going to be messy with Disney. I think they'll get some clarity probably at the end of 24, maybe beginning of 25. But for right now, that stock is a mess. It's going to continue to be a mess. Okay. You look at the dividend in two of the very popular dividend ETFs, right? SCHD continues to show much weakness. And this one's supposed to be seen as like one of the safest ones. LVHD, which is kind of like low volatility. Nah, that doesn't look like low volatility. Look at the way this baby has dropped just in the past 2 months. I mean, the past 2 months, it's been absolutely vicious for these babies. So this just goes to show you that there's clearly a move out from dividend stocks. And at the end of the day, I think it's just a lot of investors are just buying up treasuries right now. They're like, I'll buy up 3 month, 6 month, 1 year treasuries, maybe 2 year treasuries, right? But I think really the 3, 6, and 1 year treasuries are the ones that, you know, people are really funneling money into right now. And also savings accounts, you get 4.5% from some of these online savings accounts. That's a little more for the retail side of investors of looking to put in money. You know, I think the big dogs are looking more at treasuries, and that's where they're funneling money. So now do keep in mind, think about this for a moment. This is very important, okay? Keep this in mind. All this money in treasuries, 3 month treasuries, 6 month treasuries, year treasuries, at some point in time that, you know, if treasuries aren't going to yield 5% plus, at some point in time, that money's going to come back into the stock market, right? And the people that sold out of the dividend stocks will be the same one piling in to buy these dividend stocks at some point in time. It's not today, and it's not going to be tomorrow, but it will be at some point in time. I think the biggest question is it 2024 or is it 2025? I think that's really the only debate you can really have right now, okay? And they will front run it. They will front run it no different than they front ran, obviously, growth stocks, okay? So that's something we have going on. And this reminds me of, obviously, what we dealt with certainly last year, right? 2022 was the growth stock beatdown. It finally ended around October, November of 2022, right? And this year, 2023, it's the dividend stock beatdown. It's ongoing. These stocks just seem like they can't find a bottom. No one wants to own these stocks, and it is what it is. It's something that's going on in the market. It's not going to continue like that forever, folks, but it is going on right now. Now, Amazon stock was down decently here today, and that's because Amazon just announced, listen to this, they're going to hire 250,000 workers in the United States as part of its annual hiring spree ahead of the busy holiday season. The hiring goal exceeded the 150,000 people Amazon hired in each of the previous 2 years. The roles will be primarily for Amazon's operations network. Obviously, you know, this is going to be picking packages, delivering packages, you know, many of the most basic roles, many of the roles that are kind of in that, let's call $15 to $25 an hour type roles. That's what's going to be going on here, right? The e-commerce company said it opened. This is funny because, you know, 2023 is supposed to be a slow year for Amazon spending, right? Listen to this. The e-commerce company has opened over 50 new fulfillment centers and other facilities in the United States this year. This is a slow year for Amazon. Like, that's crazy. Absolute insane that they've opened that many facilities on a slow year. Like, what? Now, Amazon. Who's got more data than Amazon? Seriously. Who's got more data than Amazon? I hope everybody realizes Amazon Web Services runs the world, okay? They're the biggest big dog. They have all the data you could ever imagine, all the cloud data from so many different companies, right? What does Amazon know? That they want to way over hire than what they hired the past 2 years. My thinking, my thought process is Amazon believes this is going to be an extremely strong holiday shopping season based upon all the data they have. And like I said, I don't think there's anybody that's got more data than Amazon. The government doesn't have more. The Federal Reserve doesn't have more data than Amazon. Amazon's got the most intimate data you could ever imagine, okay? There's no one that has the sort of data Amazon has. And there's no one that probably looks at that data in more of an intelligent way than Amazon in the world. I don't care what government you are. I don't care what you got going on. What is my baby doing? What is my baby doing? Now, clearly Wall Street didn't like this move. They don't want to see Amazon hiring much for anybody right now. So that's why I believe that stock was down here today, because Wall Street's just like, don't hire right now. At the end of the day, I'm going to trust Amazon's decision making in regards to the situation. And if Amazon wants to hire 250,000 workers, They're going to hire 250,000 workers, and it's probably the right decision to make in the end, okay? And remember, these are mostly like part-time jobs. So it's not like these are $100,000 a year salary jobs that are going to be there for all of eternity or something like that. And do remember, Amazon's been very tight with hiring over this past year. So that is something to keep in mind. The thing I'm trying to figure out, okay, I'll be completely honest, where the hell are all these workers going to come from? Like I hear Target's going to hire 100,000 workers. Amazon's going to hire 250,000 workers. Where are all these workers going to come from? Like seriously, where are they going to come from with unemployment so low right now? I'll give it to you like this. Like even in Vegas here, okay, and remember, Vegas is a decently big city, but it's not like we're LA, okay? This is not New York City. This is not, Dallas, Texas. This is not Phoenix, Arizona. So we're a decent sized market, but we're not something crazy. And the amount of jobs that's just needed here right now is insane. We got a new resort Durango opening. They need to hire over, I've heard estimates anywhere between 1,000 and 1,600 workers for the Durango property, okay? I'm like, where are they going to get that? Fontainebleau's opening here in a few months. Fontainebleau is going to hire 6,500 workers. Where are these workers going to come from? Like, that's all I think about is like, where are these? And remember, many of these roles are specialized roles. You talk about everything from dealers to like chefs to, very specialized roles. Obviously they're going to have general roles like cleaning the rooms and cleaning the resort and those sorts of things, right? But there's going to be so many specialized roles. And I'm just like, where are all these jobs going to come from right now, right? The Las Vegas Grand Prix is coming, right? The F1 race. They need thousands of workers for that race in November. Thousands they're going to be hiring. And I'm like, where are we going to get all these workers from, okay? That's what I'm really trying to figure out. And they're supposed to build this A's ballpark, right? For the A's are moving to Vegas. This is supposed to be like 5,000 direct jobs and a whole bunch of indirect jobs. Even that, I'm like, where are we getting these workers from, man? Like that's all I think about. Nonetheless, folks, if you need a job, come to Vegas for the next year or so, okay? Because I can tell you, if you can't find a job here in Vegas over this next, let's just call it year, you might not be able to find a job anywhere, okay? Because I'm looking and I'm like, I don't know how they're going to fill all these positions. And here's the deal in Vegas, okay? We can't even freaking keep our schools open for the kids. We can't even keep our schools open. 4 Las Vegas area schools closed as teachers call out sick, right? Henderson School is canceled. Like, this is crazy. I never remember this being a thing. I never remember, as a kid. I always went to public school, elementary school, middle school, high school, right? And even community college. I never remember school having to be canceled because teachers were sick and there weren't enough teachers around. Like, that to me is just insanity, man. Absolute insanity. So fortunately for my kids, they're homeschooled. My wife teaches my kids, right? And but that's not obviously realistic for everybody out there. But it's insane, man. It's just like mind-blowing to me that you have to close schools because there's not enough teachers. And that's where it goes back to where are you going to find all these workers? We can't even find enough teachers. We can't even find enough substitute teachers for our schools. Where are we going to find all these workers? Where are we going to find all these workers, man? That's all I think about. I'm like, how? Okay. Crazy. And remember, you could say, well, maybe some people will leave other resorts, right? So maybe somebody leaves a Caesar resort to go work at the Durango or to go work at whatever. Well, the problem is then Caesars has to fill that role, right? So then they got to find somebody. So at the end of the day, it's just a mess. If unemployment was a lot higher than it is, it would be cake to fill all these roles. But with where we're at right now, and you can't even staff your schools, I don't know, man. I don't think it's a good thing at the moment. And so, if you need work, come to Vegas for this next year, okay? And then if you want to move back after, you can move back, do your thing, okay? Now, people are getting screwed out there. I'm just going to be honest, okay? People are buying some of these new IPOs that are coming out, which we're not ready for IPOs. We're not ready for IPOs yet. This is not that sort of market. I think, some of these folks, these VCs and whatnot, are desperate to get out of some of these positions. And I think they think the market's a lot stronger than it really is. This market is not nearly as strong as they think it is, okay? And because the NASDAQ has certainly had a great year, they automatically assume, it's a great market. No, a lot of these stocks are just catching up to where they used to be. Meta stock is not even back to an all-time high. Let that sink in for a moment. Meta stock is not even to a new all-time high, okay? Nor is Google, nor is Amazon, nor are many of these stocks. They're just playing catch up from how bad they got devastated last year, right? So you had ARM go public. This stock has gone down like literally every single trading day, I believe, since they went public. Every single day, okay? This is when folks finally started to be able to buy in. So like average folks like us, okay? Not like insiders. And look at this. The baby's just down in a straight line, right? And who knows if that baby is ever going to come back. Instacart might even be a more questionable one than the ARM, and both those are questionable IPOs, okay? Look at this. By the time people could actually get in, the stock was in the 40s. It closes today at 33.70. After hours, it's down more. It says it's up today. Baloney. No one was able to buy at these sorts of prices, okay? The average folks were allowed to buy here and then straight down. And so people are just getting screwed. I'm like, Instacart, like who's buying Instacart stock? Like stop it, man. Just stop it. I think it might be more Wall Streeters getting screwed in these. I think retail might be smart enough now and experienced enough to know not to buy these crap IPOs, because I'm just telling you, no, okay, no. At the end of the day, like if I wanted to buy something like Instacart, I'd much rather own Uber. Uber, at least, is a proven company that's been in the public markets for years. You've seen the way they've reacted to different situations, and you're getting ride sharing, right? You're getting, obviously the delivery business from stores. You're getting the food delivery business, and let's call it some adjacent businesses as well. So at the end of the day, yeah, Uber any day over Instacart. Like for a long-term buy, like give me a break, and even in the short term, because what a mess. What a mess that is. Oh boy, this is not the market for IPOs yet, folks. Not the market. No. Big tech here today. I saw Intel was down big. This was kind of the big L of the day here today. Intel, which they had what some people called exciting announcements. I don't know. It doesn't seem like the market thought it was very exciting. Shopify was down about 2% today, and I think that's relevant because Shopify was down big yesterday. Shopify was down big yesterday. It was the worst stock in big tech yesterday, and today it was the second worst stock in big tech here today. So something a little strange going on there with Shopify stock, some real weakness here recently. Obviously, we spoke about Amazon. PayPal was weak today. I might have been a buyer of PayPal stock today. Maybe. Okay. Now, in terms of the green side, not too much going on. Uber was green, Adobe was green, Meta was green. Apple eked out another green day. We'll see what's going on with Apple, right? Obviously, there's a lot of people, I don't want to say a lot of people. Some of these Wall Streeters are talking about, Apple, demand's phenomenal for Apple. And we'll see. We'll see. We'll see in regards to that, okay? Commodities, WTI showed some weakness here today. Thank goodness. That is something we do need, is weakness in WTI. Let's hope that continues on. It's something to definitely keep an eye on here, okay? I looked at the Cathie Wood watch list here today, and a couple interesting things I saw. Coinbase was down over 4% here today, but Block is under $50 now. Under $50 for Block. This stock fell a bunch more here today after the news broke that obviously their CEO is stepping down from the company. I don't know why that would be seen as a bad thing, considering the stock price has done so bad. I thought, if anything, they would take that as a positive. But, Square and PayPal just continue to struggle. And obviously Square even more than PayPal. But in terms of stock prices, in terms of numbers, I don't want to speak for Square. I think Square's numbers have been pretty respectable as well, from what I remember. PayPal numbers have been really good, but these stocks just can't find any momentum right now. It's the way it is. I don't think it's going to be like that forever, but it is what's going on at the moment, right? I saw a few other things that were very interesting. John Deere was down 3% plus here today. Obviously, one of the easiest buy companies usually of the past, let's call it 30, 40 years. By the way, I have it under housing stocks. It's not really a housing play. Obviously, much more farming, agriculture related. They do have some construction products as well. I just don't want to create a random watch list for them, so I put them under housing stocks. But yeah, that one got downgraded here today. We'll see. RH fell again today, down almost another $3 a share. Rocket down a little bit. Those are interesting plays, I think, at some point, likely in 2024. At some point in time in 2024. I don't know if it's going to be the first half or the second half, but don't be surprised if at some point in 2024 you see me loading the boat on RH, and don't be surprised if at some point in 2024 you see me loading the boat. I don't know about saying loading the boat on Rocket, but don't be surprised if you see me buying that one at some point in time. Once refinancing comes back, you start to get the hints of refinancing coming back, and obviously mortgages. Obviously, that will benefit Rocket. I think it's probably going to be more 2025, but that doesn't mean you can't position in before you start to get the good news. You usually want to position in before you get the good news. And I don't think the good news is necessarily coming in 24. It's probably coming in 25. That's why it's likely a buy at some point in 2024, maybe second half of 2024, something like that, okay? Fubo, which obviously has been a good stock this year, right? Up 56% year to date in regards to this one. And that's despite the big raise they did earlier this year. As far as Google Trends, it's looking phenomenal, folks. Some of these numbers are starting to get kind of finalized when it comes to Google Trends. We basically recently have seen the highest interest in Fubo in the last 5 years. And so that's really good. That bodes really well for what Fubo's subscriber numbers could be in the next quarter and the next several quarters. So, I can't wait for their next earnings. It might be the company I'm looking the most forward to for this coming earnings season, to be quite frank. We'll see what happens there, but definitely looks like Fubo's executing very well on their side. The heat map overall for the day continues to kind of be a mixed bag picture. You get these greens, you get these reds. It's not really, there's no direction for this market right now. I think a lot of people want to see what's going on with the Fed tomorrow, but there's really no direction. We're in a directionless market right now where people are not really sure about if the market's really going up or down over this next 6 months. That's the way I would put it. And until we get some real, sentiment from the Fed, confidence around where inflation's going, I think this market continues to just kind of flounder. I think you'll have some stocks that certainly outperform and some stocks that underperform. I'm expecting a very strong, remainder of the year for Meta and Amazon. But some of these could be in a little bit of a tougher place. So as far as me, buying the dip, never tripping. Growth, value, dividends, continue to load up on them all. We spoke about a lot of dividend stocks in this video. These stocks are out of favor right now. They will not be out of favor forever. And so I'm trying to position into a lot of these stocks heavily over this next 6 months and trying to position in front of, Wall Street coming back to this once, Treasuries start yielding a little less and savings accounts and all that stuff, right? Continue to expand your knowledge, expand your network. If you would like to join my private group and become a member in there, check out the pinned comment. You can fill out an application. We see if you're a good fit. Join us in there. We got a ridiculous amount of six-figure members in there, meaning they have over $100,000 in a portfolio, an insane amount of seven-figure members. And so you get to learn everything in the Financial Fortress program, plus you get to be part of the private Discord chat with myself and all the other members. So tremendous amount of value in that. That's pinned comment if you want to join us in there. Much love and have a great day.